Hello, everybody. This is Mark Lynn, and this is the management overview for RHC cost reporting conducted by a healthcare business specialist on January 27, 2022. This session is being recorded, so if that is an issue, please hang up and don't listen. Here is my contact information. If you need to get a hold of me, that is my cell phone number, so you're welcome to call or text at any time. I know you guys have busy schedules and sometimes are not under the normal hours of 9 to 5. So we're glad to take care of that. Dani Gilbert is not with us today, but she normally is. She is out sick, like about half of the world, it seems like. So Dani will not be here, but there is her contact information. If you're working with her on your cost report and need to get a hold of her. What we do at Healthcare Business Specialists is we work with rural health clinics. I've worked with RHCs for 35 years, and we do program evaluations, emergency preparedness. Do want you guys to start thinking about that because we're getting a lot of condition level deficiencies and having to go back and struggle and get these things done quickly. We do have 2 contracted RNs on our staff who are extremely familiar with RHCs. I've been working with them for 30 years, just like me, and we have some availability for them to go out and get your program evaluations up to speed, do your mock inspections, and help you with emergency preparedness if you do need that. We also prepare 10-care quarterly reports. Dani does about 20 to 25 of those if you are in Tennessee. And of course, we do prepare Medicare cost reports. We do 220 of those each year. So, and it is go time as of right now because this is cost report season. Cost reports are due May 31st of this year for your 12/31 year ends. There is no extension like the last 2 years. We've been able to extend those until August. That does not look like that's going to happen this year. So the pressure is on to get these things filed by May 31st. If you're not a member of our Facebook group, please join in and please participate. We have over 3,200 members at this time, and we have a lot of great people in there. A lot of people willing to share and help each other with information. Everything is free on the website, including our webinars, which you're participating in right now. Our plan for the coming month of February is to be really busy doing webinars. We're going to have Angie Charlotte, who's one of those RNs that works with us on a contract basis and does program evaluations for us. So in fact, she's in Florida right now working on a project for us. So Angie is available to do those, and we've been seeing her on the road quite a bit recently, but we're going to do a webinar on the importance of program evaluations because it is hard to deal with condition level deficiencies and the time frames you have to do all this stuff. So we're working on that, but we're going to do a billing series, lunch and learns. We should have maybe 4, some maybe even 5 of these upcoming. So we've got Charles James, Patty Harper, Dennis Schwartz from Azalea, Amanda Dennison from Blue and Company. Going to try to get Gary Lucas to do one on this 301 session there. So we've got really sharp billing people that can help you with this, and then we'll have a last session that just has the Q&A. You guys have been sending in tons of questions to me, so keep those coming in, and I am going to compile those and send those out to our panelists, and we'll get those answers to you because some of the questions are pretty hard ones I've seen so far. So and then we'll give you an update on RHC provider relief funding. I know period 2 funding, the reporting is due by March 31st. So we've got to focus on that here coming up very soon. We don't think that's going to be as hard as period 1 because most of our RHCs does not receive a lot of PRF funding for period 2. So we'll see how that goes. But that's what's coming up for you guys. A disclaimer again, the session is being recorded. Information, as far as I know, is up to date as of today. I did a quick look and could not find anything different than what I already had, so we are good to go there. If you do have questions, please put them in your question box there, submit those to me, and I will try to handle those. If you raise your hands at the end of the session, I will be able to open up your line and you can ask me a question. I am not going to be able to take questions as we go through here just because Danny's not here. Danny normally feeds those questions to me. If you do have a problem and the handouts won't download, again, I put those in a couple places. I put that on the chat box, but there's absolutely nothing we can do about that except we put them in the right place and go to webinar, and sometimes they're very friendly and nice about it, and it will download for you, and other times it will not. Here, the slides, if you do want the slides, if you just go to this website here at ruralhealthclinic.com, RHC cost reporting, we do have it on there already. And here's what it looks like right here. So here is the section of it that you're going to be looking for, and this one here where it says slides used for presentation, that is now active. So if you click there, you will be able to get your presentation there. No idea why my phone went off, but what we're talking about today is the Medicare cost report. Why is it important? Because you ain't gonna get paid unless you fill out this cost report, and they're gonna ask for all your money back. This weekend when I was watching all those football games, I was preparing a Medicare cost report from 12/31/2020, and those people weren't getting paid their money, and actually Medicare asked for them to pay back every single penny that they had received during 2020 because that cost report wasn't filed. So let's not get into the habit that a lot of you folks got into in filing these cost reports late. I think those extensions of time really hurt us on doing these things timely. So we need to get out of that habit. And I know it's going to be hard because we've been dealing with COVID for 24 months. And seems like everything is just harder during COVID. But do start thinking about this and get your information to your cost report. If it's not us, whoever's doing your cost report, get that to them, and we'll try to make this to where it applies to everybody, not just our clients. So number one is we got to get this cost report done, or we ain't gonna get paid. And our rates can dramatically increase. Our Medicare rates, due to the Consolidated Appropriations Act of 2021, is allowing independent RHCs to get much more money. We've been underpaid for years and years and years. I've been complaining about it, and we finally got some great help from the NARHC, and finally, after 30 years of going to the meetings, somebody finally listened in Washington. And I guess this goes to the persistence of our organization for continuing to ask. And we finally got that approval to where now the rates are going to be reasonable. They're going up to, they're $100 in 2021. They're up to $113. This is the upper limit too. Remember when I say, when I talk about these rates, these are not the exact rates you're going to get, but these are the upper limit, the maximum that you could possibly get. So that's why this is going to be an important year for your cost report as well, because these rates have dramatically increased for you. So you're also going to get cost report summaries for your flu, for your pneumococcal vaccines, for your COVID vaccines, your administration of those. You have any cost for those, or your monoclonal antibodies that you've been providing that you no longer, for the most part, can provide anymore. But you can get paid for those as well. Any Medicare bad debts, and what I mean by Medicare bad debts is strictly that, not indigent, not self-pay, not anything you build a Medicare Part B fee for service, but Medicare deductibles and copays that you build on a UBO4. If you do everything properly and put it on the proper schedule, then you should be able to get 65% of that money back. But let me tell you, it is hard to get. They make you run through a bunch of hoops to get that money. But if you meet the criteria, then you can get an additional payment of 65% of what those Medicare bad debts that you bill on the UBO for. Not a self-pay patient, not anything like that. I think somebody asked me yesterday about that, and I kept trying to explain. No, just your indigent, and I'm doing it. Just your Medicare Part A patients that go on a UBO for, and you are responsible for accurately preparing a cost report in compliance with Medicare and Medicaid rules. If you don't follow those rules, bad things can happen. I've had the FBI show up at my house more than once in my life, saying somebody did something wrong on a cost report, and we've had to testify. So that's no fun. So we want to make sure that you guys are doing everything right and getting the proper information to whoever prepares your cost report, because whoever prepares that cost report is not going to be signing that. It's going to be you. And so you're the ones responsible for pulling this information together accurately. And most CPAs that I know that prepare cost reports, we don't audit these. So we get your information and we put it into the forms. We know how they should go on there and what looks reasonable and not. But we're not going to be auditing those numbers like you have an audited financial. That's not the level of detail that anybody does on these cost reports. So again, what you're going to get as far as money as a settlement is the difference between the interim rate and your final rate. And again, your final rate can be much higher because the caps have gone dramatically higher over the last couple of years. You'll get that 65% bad debt that we talked about. For flu, you'll typically get about $50 per flu shot that you give. For pneumococcal, it can be anywhere between $250 and $300 for every pneumococcal shot that you give. And these are to Medicare patients too. These are just for Medicare patients. For your COVID vaccines, for the administration of those, you can look for probably $25, $30, maybe in the $40 range for the administration of those. And then for your MABs, that could be dramatically higher. I know the fee-for-service side, Medicare pays $400 for administering the IV for an MAB, and for the amount of time you have to watch the patient for 75 minutes. It takes 25 minutes for the infusion to work or to get the infusion done. So the patients end up being there a couple of hours. That time is captured on the cost report, and you are reimbursed for that as well. And then there is some money that's sort of invisible, but it's built into the rates there for copays for preventive services. And I'm not going to explain even how that works. So just the update of where we are. If you're one of our clients, you should have received a cost report agreement and a HIPAA agreement, because there is PHI in these cost reports. We have to get your flu, your patient name, who got the flu shot, and the date that they gave the flu shot, and their MBI number has to go on there. So, and then your bad debts, that's going to be PHI as well. So, excuse me. So that's important that we have that HIPAA agreement. You should have a business associate with anybody that's doing your cost report for you. And so we should have those agreements now. If you don't have one from us and you want us to do it, let us know and we will get that out to you. If somebody else normally does your cost report, I would be getting in contact with them to make sure that they can get you in on their schedule. Here is the whole process of getting signed up with us. The key that I think where we left off there is we do use a portal because we want to protect your public, your PHI. So what we want to do is get you set up with our portal and upload all of your documents there so they can be uploaded safely, HIPAA compliant, and securely. We use an outside vendor called Canopy to do that, and we'll show you how to get set up with that as well. One thing that you should do is work on getting set up with the IDM, and that's what the part that Dani normally takes care of. So I'll show you some how to find out Dani's information on how to set up for it, how to get set up to do IDM and get access to that system so we can get your PSNR over here. So that's sort of the process that you go through. Once we get your cost report finished, we'll compare it to last year's and see how we did. This is a check. This is sort of check our work to make sure that it's reasonable and make sure that what you're getting paid is reasonable. A lot of times things will show up, like if it says that your pneumococcal reimbursement should be $1,500 per pneumococcal shot, I'm gonna know, oh no, I did something wrong. I messed up on one of the percentages. I need to go back and look at it. So this is a good way for us to make sure that we don't make mistakes. We're not perfect. We do 220 of these every year. We try to never make a mistake, but I probably made a mistake or two in my 35 years of doing these. So, and I think everybody has. But here is what your portal invitation will look like. And so remember, if you see something from Canopy, that's from us, and we want you to sign up, and we'll put files on there. You can upload files, and we can put files in there for you to view as well. That will help us prepare the cost report accurately for you. I have no idea why my and keeps going off. Okay, and so so this is what it will look like. So this is not spam. If you get something that looks like this is from us, and this is what we want you to, we are inviting you to work with us. What we need you to do is upload your files. If you click this button and then click onto your file, it will upload it, and then we'll be able to view it on our side of the portal. And this is what it will look like on our side. So that's important that we do that. We are trying to go digital this year. 50% of our clinics, we want to get them filed electronically. So that's 110 out of 220. We want to get done digitally. That's going to be hard. You can tell from my office, I'm old and I am a lover of paper. That big Bertha back there, that Ricoh copy machine and scanner has printed off more pages of paper than you'll ever believe. And it's, I don't know, 20 years it's been back there. But we're trying to get away from paper. And so that's what Dani is going to do for the most part. We're going to, she will be your authorized cost preparer if we're doing your cost report. If you got somebody else that's doing your cost report, find out from them very quickly who's going to be your authorized cost, their authorized cost report preparer, and make them the person in this MCREF system. It's called MCREF, and that's the portal that we can electronically file your cost report. So I know a lot of you folks have gotten used to the PRF funding portal. It's very similar to that. For Medicaid, Medicaid's not set up on those portals, so that's going to be paper for the most part. In Tennessee, they will allow us to scan them and send a PDF of those to Tennessee, but other states, they're going to have different. Medicaid is different in every state. If you've seen one Medicaid program, you've seen one Medicaid program. And then one thing that's going to hurt me is we normally send you a big, huge leather bound package that have, you know, fancy 12 tabs and all this sort of stuff in it. We're going to try to get away from that because we're going electronic and trying to get everything done and try to kill a few less trees by doing this. So we'll see how that works out. Here is Dani's section that she's sick today and not going to be able to do it. So what we're going to do is, we did this a very similar webinar to this, not exactly like this one, back in December. She went through this in December, so the recording of the webinar is here. If you fast forward 20 minutes, you'll go to right where Dani starts talking about getting into the IDM system. So that's what I would do, so you can learn it. And that's probably top on your priority list, is go listen to what Dani says about setting up your IDM and making her the authorized cost report person, because we need to get your PSNR report, your provider statistical summary report, from this same system. So it's going to be very important that you do that. And when you're asking for your PSNR, it's extremely important this year. Normally, you just had to do 1 year, one full year. You asked, the period of time is going to be 1/1/2021 through 12/31/2021. In 2021, because of that Consolidated Reconciliation Act that allows us to get higher rates, it actually changed our upper limit on April the 1st to $100. So when you pull your report type 710 and 71S from the PSNR system, put in 2 periods. The first period, you want 1/1/21 through 3/31/21. And then your rate will be capped at $87.52 during that period of time. Your rates can go up by basically $13 a visit for the period 4/1/2021 through 12/31/21. So that's why it's important for you to do those 2 periods of time, so we have the proper information to submit to Medicare for those times, and your settlement will be accurate. If you don't do that, your settlement's not going to be accurate there. We have to make some type of estimate to do that. So why is getting a good PSNR important? It's going to allow us to make an accurate estimate of your Medicare settlement. So we won't be surprised when you don't get as much money when the MAC settles what's called MPRs it and ask you to pay some money back. If we have a good PSNR, that's not going to be a problem. It's going to, what it does is it provides accurate information on the number of Medicare visits, how much the deductibles were, and what your interim payment was and what was. And so And again, it's going to help avoid this unexpected payback to Medicare. So all of the above is the answer to that question there. Let's go into what's new. More money, more problems. We are getting more money into the system, which is great. It does create more problems, as we all know, all this PRF fund reporting and us trying to keep up with COVID testing money and what rules for our vaccine competence grant. I mean, you got 3 or 4 or 5 new things and all these new monies, and it is causing a lot of headaches as far as accounting and keeping up with things. So nowadays, accurate cost reporting is more important than ever. I mean, I hate to say this, but I had the easiest job in the world thanks to Medicare. The average cost of a rural health clinic Medicare visit was about $130 a visit, and the cap was $87. You did not have to be that bright to get the maximum rate from Medicare. Of the hundreds of cost reports that we file every year, we might have 2 or 3 that did not get the maximum rate. So our job, like I said, was relatively easy, getting you the maximum amount. That's going to change because these caps are going up. So you want to capture as much as cost as possible. These cost reports are done on what's called accrual basis. So you can accrue some expenses. I would go back and look at your your January expenses up to this point and just see if there was anything that you paid that could have related to 12/31. And let's put together an accrual basis accounting and try to capture those expenses in the right period of time, because that's going to be important that you do that. Your potential for large paybacks are greater than ever because these rates are going to get higher and higher, and the potential for costs going up, and visits are all over the place. We had a meeting this week with one of the Medicaid programs, and oh my goodness, we're going to have to pay back a bunch of money because our visits went from 4,000 visits in 2019 to like 17,000 in 2020, and it was all COVID related. I mean, the visits just went through the roof because of it. So we ended up having to pay back money. So there's potential for large paybacks with this program. So again, don't want to cry, but our job's a lot harder than it used to be. Here are the rates, and what people get confused about, the rates are going up by $13 a visit each year. This is what we call the upper limit. That doesn't mean you're going to get $190 a visit. Let's say, for example, in 2022, our cost per visit is $150 a visit. Medicare will pay us $113 a visit because our cost per visit was higher than that. If our cost per visit, what did I just say? If our cost per visit was $150 and the rate is $113, that's the most that we're going to get. If our cost per visit, let's see, and I think that's the main point I wanted to make to you on that, is that if the cost per visit is higher, you're going to be limited to the $113. If your cost per visit is $80 a visit in 2022, you're going to get $80 a visit. So that's why it's important to us to capture as much cost as we possibly can. If you did want to claim Medicare bad debts in your 12/31/21 cost report, the time frame is over. You had to write that off by the end of the year. If you guys are a 3/31 or a 6/30, you still have time to do that. Don't worry, if you miss that deadline, go ahead and write those accounts off now, and we'll put that on your 12/31/22 cost report. There's no time limit on this Medicare bad debt. It's when you wrote off that bank account. When you decided that, sorry, Mark Lynn is not going to pay you, and you made all your collection efforts, then you can claim that bad debt on that particular year. Again, we're talking about accrual basis accounting. If you're going to make bonuses to an owner and they've had a really good year, and you want to accrue that expense and put it into our 12/31/21 cost report, accrue it as long as you liquidate it within 75 days of year end, which is March 16, 2022. Pay it, liquidate it, cash that check. Don't write a check and hold on to it. I've had some doctors want to do that. I'm like, no, that doesn't work. You could do that. That will add to your expense. Also, If you want to set up a retirement plan, we had a good year, we got all this money, we don't know what to do with all this money that we got, set up a retirement plan for your employees, have it go back to being effective in 2021 and cover that period of time. You can accrue that expense and then pay it within 1 year of the end of your fiscal year, and that's an allowable expense on the cost report. IDM, we talked about that. Go ahead. There's no hard and fast date. I just put this date in here, but the sooner you do this, the better off it is. And set up Dani Gilbert as your authorized cost report preparer, or whoever does your cost report, have them do that. We have the cost report submission. I have over in your handouts here. Like I said, we've got 5 handouts. One of them is your cost report checklist and work papers. That's 21 pages long, and I just have the checklist, which is only 3 pages long. So that's over there. If you can get that stuff to us by 3/31 or to your cost report preparer, do that, because we need a couple months to get all these cost reports processed for you, and so that will be great. And then if you are having a productivity standard problem, and some RHCs have been having that, the MACs, and a MAC is a Medicare Administrative Contractor. If you're in Tennessee, Alabama, Georgia, a lot of you guys will be using Palmetto. A lot of you people that have what's called out of jurisdiction MACs, they will have Palmetto as well. They took over all the Riverbend stuff from 2009. But if you are having productivity standard issues, let us know early, and we can submit a request for a waiver. And last year we submitted several of them and got them all approved. So it's not a hard process. We just need to do it early so that we get that. If you're brand new to the RHC program, you're going to have what's called a Medicaid base year, and you need to talk to whoever's preparing your cost report. You should try to get somebody who's familiar with your particular state on these Medicaid programs. Because if you've seen one Medicaid program, you've seen one Medicaid program, and they're different. And I know somebody this morning wants to do a cost report for Texas, and I sent them to David James, because David's done a lot of Texas cost reports, and Medicaid was asking for weird stuff. And I just like, David, you need to do this one. So make sure whoever's doing your cost report knows your state very well. That's my advice on that. If you're in Tennessee, Kentucky, Alabama, we tend to know those states' Medicaid programs like the back of our hands. So what is your cost report? It's called a Form 222-17 for independent RHCs. For hospitals, it's a 2552-10, and it will be the M series. And this program is geared towards independent RHCs, because those 220 cost reports we do are all independent RHCs. I think the last time I did a hospital cost report was in 1997. So good riddance. Those things are hard, let me just tell you. So get somebody who knows your hospital cost reports there. I know we use Whiffley a lot. We use Kraft Brothers a lot for people that have provider-based RHCs. So the good news is there's 3 different types of cost reports that you can do. If you're a pediatric office and have no Medicare utilization whatsoever, then we want you to file a no utilization cost report. It basically just says, we don't have any Medicare, we don't want any money from you, and here's our number, please check us off your list, and be done with it. And they're very simple. The fees are very low from our standpoint, but that's going to be very easy. So you guys that are pediatric offices, you can hang up now and rest easy. There's not a whole lot to know. If you have very low Medicare utilization, or maybe you're a brand new RHC that didn't have a whole lot of visits, maybe you got surveyed in October or November and your billing really wasn't going, you will receive less than $50,000 of money from Medicare. And that's the number that they're using. It's not charges, but it's actual payments from Medicare. If your payments from Medicare are less than $50,000, you qualify for a low utilization cost report. If you get $50,000 or more, you're required to do a full utilization cost report. Now, the good thing about this full utilization cost report is you're going to get a settlement from Medicare. You're going to get money for your flu and pneumococcal, for your COVID vaccines, For your MABs, you're going to get money for your Medicare bad debt. So that's good. You want to get that money. If you file a low utilization, you're just telling Medicare, we're so thankful that you gave us what you did, we're good. And so, and that's not the best decision a lot of times to do that. But if you did a lot of flu and pneumococcal, that would probably be a bad decision. You'd want to go ahead and do that so you could get that additional money. Also, the big difference here is with this consolidated, what did they call the thing? Consolidated, I read that because I couldn't remember. Consolidated Appropriations Act, the additional money that you're getting there, the rate going from 86 to 100 and 86 to 113, you're not going to get those increases if you file low utilization cost reports. So you need to do a math sort of problem there is how much are we paying the consultants, the CPAs to do the full cost report versus how much money are we going to get from Medicare if we can raise our rate from 87 to 113, how much that money. And for the most part, it does pay for you guys at this point to do a full utilization cost report. So that's a discussion you want to have with whoever's preparing a cost report, whether normally we file a low utilization cost report, but is this year that we need to change that and go with a full cost report. Here's the rules on no utilization cost reports. Tennessee had been requiring us to file full cost reports for our pediatric offices. We no longer have to do that, so that's great. We can file no and low utilization cost reports in Tennessee. So you want to know those rules for that. Here is the thresholds for the low utilization cost reports as well, and the requirement to do a full utilization cost report here. That was from one of the MACs that are out there. For the low utilization cost report, you are going to have to give them a little bit of information, basically a balance sheet and an income statement, and the authorized signer has to sign that we're good. Well, thank you for the money, but we're good. We're not going to ask you for any more money, and basically submit that with the cost report worksheet S on there, and you're good to go. So, and I apologize for talking so fast, but I've got probably 2 hours of material I'm going to try to get done in an hour. And so, again, here's what you're giving up. You know, your flu, your pneumococcal, COVID, MABs, copays, on preventive services, which shouldn't be a lot, preventive bad debts, and then differences in your interim rates. That one will be the big question there. So the differences in interim rates, okay? Here's gathering the information for your cost report, and here is the 3-page checklist that we've got for you. Here's what we're looking for. Number one, this is truly a cost report. Medicare don't care a lick about what your revenues are, how much money you collected. Excuse me, that does not matter to Medicare. What matters is how you spent your money. So this is truly a cost report. And what we need is a trial balance. If you've got financial statements from an accountant, or if you even your QuickBooks stuff that you have, we need that. Or if your federal tax return, give any one of those 3 will work. If you can give us all 3, that's that much better. But try to get that information to us so we can see what your expenses are. And what we will do is we'll put that in a file. We'll put it into the cost report format, and then use that to compute what your cost per visit is. The second piece of our cost per visit is your visits. We need something that tells us what your visits are, and the best way is to send us a CPT frequency report by provider. Don't break it out by Medicare, Medicaid, self-pay. Some people will send us a CPT frequency report breaking it down by payer. I don't want it by payer. That's going to double count a lot of things. So just send us a CPT frequency report by provider. That is the best way to do this. Some people will do a manual visit count and send it to us. That's fine. We've put together a cheat sheet for you to count those. That makes it easier on us, but I always worry when people are counting those visits. I don't know if they probably can't count them as good as we can, because it's more of an art than a science. And so we've been doing it. I've been doing it for 35 years. Danny's been doing it for 10 years now. So you know, that's one thing that we definitely recommend doing this. because you guys were talking about a 12/31 year end, this works out really well. You have W-2s, so I'm going to feel really good that your W-2s, the salaries you pay to your employees, is going to be pretty doggone accurate. So if you'll send us a copy of those W-2s and write down what each person does or was supposed to do. Don't write down, we fired Mark, during the year, so tell me, what Mark was doing or supposed to be doing during that time that they were there, so I can put it in the right place on the cost report. So W-2s are important. If you're a 331 or a 630, then send a payroll journal so I can know what your gross salaries are and I can reclassify it to the proper place. A log. If you've got influenza and pneumococcal, we need a Medicare log showing the patient name, their MBI number, and the date of service. We also need invoices. Whenever you purchased your pneumococcal and influenza vaccine, I need to know how much you spent per shot. So send us your invoices. Don't send us packing lists. I've seen people give us packing lists. We just trash them. So give us invoices to show that. Don't send us statements either. Send invoices for that, and that works out great for that. Also, we need to know your non-Medicare patients as well, because the computation computes your total vaccine cost divided by your total vaccines, and then it sets off a percentage for your Medicare patients as well, and that's what you get paid. Again, your PSNR report, extremely important that we get this. If you completely fail on this one and don't get set up in IDM and lose access to it, we can get those for you. It's just, we don't want to be bothering. We got, spies on the inside at all the MACs that are very kind to us and will get us your PSNR. But if you don't get it, let us know and we'll get that for you. But let's try it first. When you ask for it, ask for a summary PSNR. You want it in PDF format. Don't ask for a detail. That sounds great. Oh, let's get a detailed PSNR. They're going to send that to you in about 6 weeks on a CD-ROM, and it's going to have all your payment data in it by claim by claim. Nobody wants that unless you got a really big problem. And then, of course, your Medicare Bad Debts. If you want to try that, you've got to put that on an Excel spreadsheet that we can provide for you, and it's a lot of detail-oriented stuff there that you can get your Medicare bad debt money. Related party. What we want you to do is identify if you rent the building from your spouse and they charge $1 million rent for an old shack, we need to know that, because we're going to disallow that $1 million. It's going to be non-allowable expense. Any related party transaction, if you're doing business with companies that your spouse or your immediate family own, we need to know that. If you're employing your spouse or your sons or your daughters, let us know. Those are related party transactions. We have to report that to the government in worksheet A-8-1 for that. If you're doing non-RHC hours, you need to let us know that. We need to exclude that cost from there. And then if Palmetto is your MAC, they're telling us now, if you're doing non-RHC hours, you have to have a separate NPI number for that. That's why they're denying all your claims from your non-RHC hours. It's because of that. So go out and get your NPI number, but let us know. For laboratory, the weird thing about laboratory is there's 6 required lab tests to be a rural health clinic. Those 6 lab tests aren't covered under the RHC benefits. So we need to figure out how much time and how much money it costs you to do those 6 lab tests, plus whatever lab you do. Lab, you can bill that and get paid fee for service for that. If you're an independent RHC, you bill it on a 1500 form. So, but that expense is non-allowable on the cost report. We have to exclude that. So we need to have a little bit of time on that. FTE calculation, what we want you to do is for your providers, for your physician, nurse practitioners, and PAs, or your certified nurse midwives, is keep up with their time, and especially the time seeing patients and documenting in the charts what they're doing to that patient. That we need that time so we can do a good FTE calculation because of what's called productivity screen. So that's going to be important. depreciation schedule, send us a depreciation schedule. We'll convert it to straight line, and we'll get that cost on the cost report. Number 12, we need any type of correspondence from Medicare, just so we have the proper names, the proper CCN numbers. Also, what's very important is if they send you a letter and they send money to you, or they take money away from you as an interim settlement or a tentative settlement, we need to know that. We can't accurately complete this cost report without knowing what those tentative settlements are, especially during the cost report year that we're filing the cost report for. 13, this is something they added in the 2017 version of the software. They just want to know what your number of Medicare, your CHIP visits, which I have no idea how to get that number. The CHIP visits, people have asked me that, and I've asked people, and nobody knows how to get that. But that's something to do with children. I know what it is, but I just don't know how to find those number of visits. So children's, I don't know what HLP means, so, but children's health, I got that health right. So Medicare, that one's easy. The PSNR report is going to tell us exactly the number of Medicare visits you have, so we're good to go there. Medicaid, if you can give us a good idea what your Medicaid visits are, and then we can plug the difference here on other. That's going to be just the difference between Medicare and Medicaid and your total visits that we count for you. Another thing that they've asked for, number 14 here, is malpractice costs. This is a for information only type of thing, but they want to know what type of Medicare program is it? Is it a malpractice program? Is it claims made or occurrence? And what your premiums were, if you had any paid losses or self-insurance costs. So we need to know that. It's a requirement. On this one here, again, we're reminding you about the settlements here because that's important. Who's going to sign the cost report? That's going to be very important, especially since we're doing it electronically. You'll want to make sure you put the owner of the clinic, the physician, medical director, whoever it is. Sometimes it's the office manager, practice administrator, and give me their email because we have to put that in the software to make it work. Here's what's all going to go into these. When we upload this to the portal, we're going to send them all of our work papers. That's one thing that we've always been, is very transparent with Medicare. We produce electronic cost report work paper file. We submit everything to Medicare. We put it in as a PDF. We actually scan everything, put it in as a PDF, and submit it to Medicare. We've always done that through USB drives or CD-ROMs back in the day. But we'll just continue doing that, except for we'll be doing it through a portal for them. But that's what we do. How your cost per visit is computed is we take your total RHC cost. So here's your total expenses up here, and here's your total visits here. And what happens is, everybody wants to count. Oh, we want to count more and more visits. And so let's count this, and this, and get this visit number up. What happens to your cost per visit when your visits go way up? Your cost per visit goes down. So we don't necessarily want you to count as many visits as you possibly can. We want you to count them accurately, so your cost per visit will be accurate from that. So, and then here's the types of costs. It has to be allowable cost. On there has to be reasonable. You can't be I had one doctor who was buying condos in Destin and buying airplanes to go fly down there and bought a $20,000 desk and a $150,000 Mercedes, and Medicare said, we ain't paying for that, and which they should be. And so those types of things, you can't buy liquor, you can't be throwing parties, all that sort of stuff. Advertising, they're gonna disallow some of your advertising costs as well. So, but here's what your allowable costs are. We use the HIM 15 manual to determine what's reasonable and allowable or not. So we've already told you what we want as far as your numerator of your expenses. Here's what we're going to use for that. If you're provider-based, you probably have some type of internal financial reports that can be put into the M series of the provider-based cost report. So you want to talk to your controller, your CFO about that, what information they need to prepare that cost report and give to the cost report preparer. Some of the cost centers that are relatively new, what you want to do in your chart of accounts when you're coding things, when you get that, I don't know, Pfizer or whoever whoever does your pneumococcal vaccines, you get that invoice, you want to code that to pneumococcal vaccine so it shows up on your trial balance. Same thing with influenza, same thing with telehealth and chronic care management. Influenza and pneumococcal, you're going to get additional money for that on the cost report. For telehealth and chronic care management, that is going to be actually disallowed cost on the cost report because it's not a part of your what's called all-inclusive rate. It's not a part of that calculation. So we're going to disallow that cost on the cost report. So we need to know it so that we can disallow it properly. And of course, we're not going to count these telehealth visits in the cost report. Another reason why I want that CPT frequency report, so I can tell what needs to be counted and not counted, and then considered for what we disallow on the cost report. Chronic care management care as well, same thing. The rates have really gone up dramatically this year. I think it's $76, $77 per 20 minutes of time for chronic care management. So if you've not done that yet, that's probably a good idea. But that cost is not a part of your all-inclusive rate. So here is the rules change from 2000, the old version, the 92 version. We have a conversion sheet here. So if you guys are if you are preparing your own cost report, I mean, more power to you. Here is a conversion worksheet that I use because I'm old as the hills and I keep on trying to use the old numbers when I'm coding our expenses here, but here are the new cost report centers. So if you're a cost report preparer, this will come in handy. If you're brand new and setting up your chart of accounts for your expenses, here is a chart of accounts for you guys that's based upon the cost report that will help you put the proper expenses in there for that. What is the best way to count visits? A, manual hand count. B, a computer report broken down by payer. C, a CPT frequency report broken down by provider. Hopefully we know by now C is the right answer. B is the completely wrong answer because that's going to overcount your visits every single time. Why? We build Medicare primary, we build Blue Cross secondary. That visit is going to show up on both of those, in both of those payer categories. And you're going to have, you may have a clinic that has 7,000, 8,000 visits. It will show 19,000, 20,000 visits every single time if you do it that way. And you think, oh, that's great, but we're going to get so much more money because we had 19,000 visits. No, it's going to cripple your cost per visit rate. So you don't want to do that. So, all right, let's go on to the next one. So here again, do not count 99211s. Those are nurse-only visits. You don't count that. Some people want to count injections, lab procedures. You have to know those CPT codes on there in order to get this correct. So that's one reason why we say it's an art, not a science. Have somebody who knows count those visits for you. So that's why it's important. Here's what a visit is. It's a face-to-face encounter between a physician, nurse practitioner, and PA where a medically necessary service is provided within the scope of practice for that particular provider. That's what we're shooting for. We're looking for face-to-face encounters. That's something that's been in the RHC rules for too long, actually, but it's still in the rules. And so we sort of fallen behind. This is sort of a dinosaur from a different time, but we still have to deal with this face-to-face rule. So again, by now you know CPT frequency report by provider. That's what your person needs. Here's the additional information that you need. Do the best you can with that. Again, it's not going to affect how much money you get or anything. It's just information only, but we'll try to get that. And then there's a work paper that we use to capture that. Keeping good provider time records is important because A, it could lower the number of visits to meet the minimum productivity standard. It may be needed in case of an audit. C, it could increase your payment from Medicare. D, all of the above. Again, this answer to this one is all of the above. So keep good provider time records so that you have you get the proper reimbursement. People you should be keeping time records on are your physician, PAs, nurse practitioners. If you have visiting nurses, which nobody does, clinical psychologists and clinical social workers. It's going to be important that you do keep time studies on all of those people. A time study should be, the Medicare rule says you should do 1 week per month doing a good time study on everybody. That's, I think I may have seen one proper time study in doing this 35 years here, but maybe every quarter. I think the minimum should be every quarter, at least do a time study on your providers and see what they're doing. Shoot for the gold standard, which is every month if you can. But again, I don't really see a whole lot of it. For a physician, the minimum productivity standard is 4,200 visits. That's not that much. It's about 17 visits a day if on a normal 250 work day year. About monthly, about 350 visits per year or per month. For nurse practitioners and PAs, it's 2,100 for a 40-hour week. Remember, if they're not working 40 hours a week, this is one of these time studies are important, is they're not a 1 FTE, if they only work 4 days a week, they're a 0.8 FTE. And so now our productivity center is 0.8 times 4,200. So keep that in mind. In our case here, nurse practitioners has to see about 8.5, 9 visits a day to meet minimum productivity. Not that hard to do. If you're not meeting 8 or 9 visits a day, you're not going to be able to pay the bills anyway. And so monthly productivity about 175 per month. What's important about this is if you don't meet the minimum productivity standard, we can ask for a waiver for that during COVID. So let us know if you're not meeting these standards, because it will hurt your cost per visit if you're not meeting these. Because the way this productivity standard works is our cost per visit is here, and our actual visits are way down here because we really weren't that busy, or whatever reason it was, they weren't that busy. And what Medicare says is, oh, that's terrible, that's way too low, we're going to move it to here, the minimum productivity. And what happens to your cost per visit when we do that? It goes down. So that can really impact how much money you're paid for that. So you want to make sure you're doing that. And then here's keeping up with your time. This first stuff we're really interested in: time spent in the clinic, time with SNF patients, time with swing bed patients, time charting. All of that is going to be a part of this FTE calculation. Things you should not include in there are hospital. Anytime you're in the hospital, that's not a part of the RHC. If you're doing administration, you're paying payroll, you're listening to this stupid webinar, committee time. And if you're doing telehealth and telemedicine, this is a big one here, do not include this in your RHC FTE, because you're not doing those services. We can actually reduce your time by telehealth and telemedicine time, because it's not a part of that all-inclusive rate. So keep that in mind. Here's a time study. I think this is one that David James did, or maybe been Julie Quinn, but here's some time studies for your FTEs. How are we doing on time here? I've got 8 minutes. Y'all gonna kill me. Okay, I'm going fast. Influenza and pneumococcal logs must include patient name, patient MBI number, and date of injection. All of those are going to be on there. And then here, I think I've showed you this one before, so I'm going to skip through that, but that's the information we need for influenza and pneumococcal. Here's what your log should look like, John Smith. Here's my MBI number, and then the date of service on here. And 270 is about right. 66 for influenza. I think that's the national average. If you haven't got one of those reports from the National Association of Rural Health Clinics on benchmarking, Wifley, which is a CPA firm, which is great. A lot of folks use Wifley. Jeff Johnson, Jeff Bromschreiber, they've been doing this as long as I have. But they have this benchmarking report where you can look at your cost reports and see how you compare to everybody else. And so these were some of the national averages a few years ago. The new stuff for the COVID vaccines and monoclonal injections, you're going to treat those just like influenza and pneumococcal for 2021. You're also going to add Medicare Advantage and replacement plans and put those on separately for 2021 only. This is unusual. This has never been done this way, but for 2021, you're going to put Medicare Advantage and replacement plans, COVID and MABs on the cost report. Don't put flu and pneumococcal Medicare Advantage, but just the COVID and the MABs are going to go on there. Keep good time records on that, because you're going to get some additional money for that as well. And so here's the real 2022. You will go back to the old way of doing things. The Medicare Advantage plans and for vaccines and MABs will no longer go on the cost report in 2022. So you're going to bill that to the Medicare Advantage plan. However they pay you for that's what you guys are going to do for that. Here's a vaccine log that Patty Harper did for us in Inquidocs. If you haven't gotten Inquidocs, you should probably get that. That thing is, Patty does a great job of having an evidence binder built in for you and policies and procedures. And frankly, we just can't keep up with all the different policies that you have to do. The surprise billing, the vaccine mandate, it's gotten so complicated that somebody like us with Danny and myself can't make all these different policies and know all these things. So Inquidocs is becoming more and more valuable to everybody. So if you need to get a hold of Patty, get that set up. It's very reasonably priced. Let me know. And I don't get any money for that. So just so you know. But there's something from Patty. Here's our log. We like for you to use our log because it counts them for us. And just put the patient name, MBI number, and date. And then here's your pneumococcal log. Here's your COVID log. I forgot to put the MAB log in there, but and then here's what will happen is this will go on the cost report. We'll put a work paper together that looks something like this, and you don't need to know what we're going to do with that. And then here's what it's going to look like on the cost report when we finish with your COVID-19 vaccines and med supplies and monoclonal antibody products here. So that will go on there as well. And then here's where you're going to get paid for this. Hopefully you'll get $30, $40 for administration. Remember, there's no direct cost for these MABs or for this COVID vaccine. This is just for your time for administering it. Repayments, we've talked a little bit about this. If you do not tell us about these interim settlements, that's going to be you and I crying because we have to pay back a bunch of money to Medicare because we didn't put that on the cost report. So we have a form for you guys to write in there, and we put a big notice on here. If you don't tell us, we're going to have problems. So if you get any interim lump sum payments during the year for this fiscal year, let us know, or let whoever's preparing your cost report know that you got those. Here's what it's going to look like. It says you received a lump sum of 36 grand. Your new rate is $96. You want to, if you see anything that looks like that, send that to the person who prepares your cost report so it can be done accurately. Why do you have to pay money back? You didn't give as much flu or pneumococcal as the previous year. Sometimes that happens. Sometimes the interim rates are too high. The MACs are supposed to look at your interim rates twice a year now, so they're pretty close and pretty accurate. So that's going to be important. Also, we had some where the Medicare visits increased substantially during the year. We had that one provider went from 4,000 to 17,000 visits. We've had people that started doing these nursing home rounds, and their visits have gone from 4,000 or 5,000 to 15,000 visits in a year because they did so many nursing home rounds, and that just killed their Medicare rate. So things like that. Sometimes you don't claim Medicare bad debts, and then again, the interim settlements. We've talked about that one ad nauseum. Finally, last section, Medicare bad debts. Here's what a Medicare bad debt is. Number one, the debt must be related to a covered service and derived from deductible and copay. That means it shows up on a remittance advice from Medicare Part A. That's the only thing, I can't emphasize this enough, that's the only thing that will count towards this Medicare bad debt. You must have reasonable collection efforts. That means you have to try for at least, what's the number? My brain is going to 180 days, 120 days, 180 days. We'll use 180 days from the date of first bill. You have to try to collect. If you don't have that amount of collection effort, then you're not going to get, they're not going to be allowable. So it's from the date of first bill as well. And then what you have to write off the account. You have to cease collection efforts. You just can't say, okay, I'm going to turn this into Medicare, but I'm going to keep billing that sorry Mark Lynn and see if I can get that money out of him as well. No, you have to stop collection efforts at this time and put that and do that. So here's, and also there's something called crossovers. What happens is if Medicare, if the patient is old as the hills, okay, that'll be me in a couple of years, I'll be on Medicare. And I'm also on Medicaid as well. That's called a crossover or a dual eligible. Medicare is my primary and Medicaid is my secondary. And when the claim crosses over to Medicaid, and Medicaid is supposed to pay that $20 copay, and they may pay us $2 or $3 for it, that's not a write-off. You don't write off that $18 difference. You can put that on your cost report as a Medicare bad debt, and you'll be able to get 65% of $18 in that situation. So you'll want to look at that very closely. If Medicaid is not paying you properly on your dual eligibles or your crossovers, that is one way to recoup at least some of that money. So keep that in mind. So here's some of the rules. It's much better to collect 120 days from date of first, but I said 180. So 120, I knew my brain was messing up there. Copay, 20% of charges, deductible, and I got to update the slide. It's $233 in 2021 is the new deductible, $233. You have to bill it to Medicare Part A. Nothing else is allowed. You must treat everyone the same. You can't treat Medicare patients. You don't have a Medicare payment policy or Medicare bad debt policy. Why? That implies that you're treating those Medicare patients differently than you would anybody else. And so it must be written off in the fiscal year of the cost report. Collection efforts must cease. That means if you're turning me over to the collection agency, then you haven't stopped trying to collect, and you can't put that on the cost report. When that collection agency says, oh, we can't find that sorry Mark Lynn, he lives in a van down by the river with his 10 kids and we can't find him, and the collection agency is not going to be successful, that's the point when you can actually take that collection back and write it off, because you ain't going to get that money. Okay, so and let's see, Medicare bad debts must meet these following criteria. And then use an Excel spreadsheet. If you don't use an Excel spreadsheet, it's not going to work. If you write it down, I know one summer, me and the interns, we spent the whole summer putting somebody's 200 pages of bad debts into an Excel spreadsheet, and it was absolutely no fun. So keep your regular and your crossover bad debts in separate Excel spreadsheets. That's important that you do it now. Get started early. Even if you're not going to file them for 12/31/21, start working for 12/31/22. This takes a lot of time. Here's what the Exhibit 2 looks like. This is the form that you use for independent RHCs. There's another form called Exhibit 2A that is horrible. You do not have to use this as an independent RHC. For provider-based, you may need to use this form. I don't know. I would talk to your cost report preparer and ask them, do we have to use this horrible form? Because there's 25 columns of information that they want. And again, here is the crossover dual eligible, just a reminder about that. So here's some bad debt links there for you guys. If you want to get the sample policy, if you want to get a bad debt logs, those are there as well. And I finished, 2 minutes longer than the 1 hour. That is a miracle. Okay, that was me talking faster than my Tennessee drawl would allow. Okay, now, let's see here. Does Dani do just one cost report? If so, is it free? No, we don't do free cost reports. we give away so much free already. We don't do free cost reports. Is it the minimum visit $2,100 for a nurse practitioner? Is this for each nurse practitioner practice? Yes, then it's $2,100 per nurse practitioner, and that's it's per FTE. So if you've got a person who works 40 hours a week, then their productivity center is $2,100. If you've got one nurse practitioner who only works 50% of the time, then theirs is 50% times $2,100 or $1,050. Please elaborate on provider time record. Should the provider log time spent with patient or time in clinic per day? Not sure what time we are recording. What I would do is basically just keep a calendar of, if you're in there seeing patients, write down from 9 till noon we were seeing patients and doing medical records. Keep up with something like that. Typically a calendar is the one that is what you'd want to use for that, Leslie. And we can work on that one. Next time we meet, we can talk about exactly what you need for that. Can an authorized cost report preparer also run the summary PSR? Yes, Brent, they sure can. They can. So that's a good question. Is it recorded? Yes, the session is recorded. Can the calendar be sent in an email so it can be printed. I don't know what that means, but send me an email and I will. I'll try to figure out what that means, Lori. I'm not sure. Can a calendar be sent in email? Okay. Let's see. Just making sure low utilization can claim bad debt. Now, if you have a low utilization cost report, you are not going to get Medicare bad debt. We became an RHC in September, so will our recording of everything begin January of 2022? Lisa, now what will happen is the date that you're surveyed as an RHC, that begins your RHC time, and it will run through, if you're 12/31 year in, which I think you guys are, then you can I was reading the next question, I lost my train of thought. So you were certified in September of this year. Your cost report period will be, say, September 3rd through 12/31 of this year. You will typically file what's called a low utilization cost report for that period of time because you'll have less than $50,000 of payments. And then your base year, especially you're in Kentucky, so you'll have a base year cost report that will start January 1 of this year. So we'll talk about that, Lisa, whenever you want to. The calendar of webinars, those Lori, you will see those webinars. They're not tentative, so I don't want to hand that out yet, but whenever we get it finalized, you will hear more than enough about those webinars, believe me. How much do you charge to prepare the cost report? It really depends on the size of the clinic and how many providers they have. It's not a one size fits all, because if you've got 10 providers, it's a lot harder to do than if you have one. So Tiffany, if you want us to give you a quote, let us know, and we will definitely let you know how much it costs. Do provider-based RHCs also need to split the PSNR for period 3/31 through 4/1/21? Brent, I would ask your cost report person, because on provider-based, there's all sorts of different rules. Some of them are grandfathered. There's a weird way where they calculate rates if you were grandfathered and what those rates are. And then if you have a new RHC, if you're brand new to the RHC program, then you would definitely have to break out that period of time, because you are subject to these cost caps if you're brand new. If you're grandfathered, I think it was 12/31/2020 and before, they're going to have a weird cap on it that will be different. So I would just ask your cost report prepared to give you the right information on that. Okay, I think that's all the questions. No, y'all just ran. Okay. Do we go through the portal, your portal, if we are low utilization, or complete your forms? Yes, go to in our portal, and Pamela send that stuff to us, and then we'll get that low utilization cost report prepared for you. And usually Dani does those very quickly for you guys. Okay, Brenda, there is a COVID-19 vaccine log and a Medicare COVID-19 log. So all other COVID vaccines go on one log, and then the Medicare vaccines go on the other. Yes, you definitely want to keep Medicare vaccines on one log, keep them separate from your other logs. Best practices is to keep logs on everybody. So you have an insurance log, you have a Medicare log, you have a Medicaid log, so you have 3 logs. So that's the best practice to do that. You're not required to keep logs for your commercial insurances or your self-pays, but like I said, that's the best practice. Okay, okay, very good. All right, and I think that's everything. I'll take a quick look here. If you've got your hand up, we can try open up your line. It's usually like bad radio when I do this because nothing ever works. Okay, Meg, I see your hand up has been Meg, let me see here. Okay, you're self-muted, Meg. Do you have a question? Or is she back seeing patients? Probably back seeing patients. Oh, no, yep, okay. Yeah, you're self-muted, Meg, if you did want to say something. If you open your hand, you can ask a question out loud. And this is when I need Dani for stuff like this. Okay, thank you everybody for hanging around. I apologize for talking so fast, but we had a lot of material and I tried to get it done very quickly. And thank y'all. Thank you for what you do. Stay safe. I know everybody is getting sick. Everybody I think I've talked to has gotten sick. So y'all be careful, be safe, and we will talk to you guys later. Thank you.